Okay, here we go. So this is the setup from the book. I just mapped out the GBPUSD for you so you can see. Um, Usually, you know, before you even start looking at where's the price action, where the moving averages are positioned, you look at the moving average of the oscillator, and if you're going to go long, this has to be green. If you're going to go short, it has to be red. This is one of my custom ones. The one that comes with the MT4, it's all gray, so it's either up or down. But whatever, I can send you the custom one that I have. In any case, so this was beginning of 2019. Nice entry here, 450 pips. Then you got 140, because didn't quite hit the target, so closed it on the opposite signal. A nice 210 pips long again. Started on this candle here on the retrace to the moving average. It's just like the book talks about, so just read it a few times over. It's very easy to memorize. And of course, every now and then you have some losses, which are kind of hard to swallow at first, especially when you're trading a full lot. That could be $2,000-3,000. So it's better to start with a smaller lots to get used to it. But overall, as you can see, they were pretty nice, hefty targets, and they usually get hit. So the way you usually set that up, I'll quickly show you here. So for example, to go short, the 8 moving average has to be below the 10 moving average, and you're basically going off of the faster moving average as your entry point, as the price retraces back to it after crossing to this side. And of course the OSMA has to be, OSMA is the this little guy here, has to be in sync with color as well. So you have a little red starting here, so that's good to enter. And then you get from here to here, it's about 2,000 points, so that's going to be 200 pips times 1.5 change. That's comes out to about 300 pips. I think closed over here. Anyway, I'm not very exact at it right now, but I measured that earlier, so that's what it looked like. And then you have, of course, 2 big losses, which is painful. You just got to keep going, and you do the same thing for each pair. So basically, to trade one lot for each pair using this, you need about $10,000 for each pair in your account to trade full lot. So if you want to do a micro lot, then 1,000 per pair, and if you want to do, sorry, that was mini lots, and if you want to do micro lots, then at least $100 per pair. That's in high leverage account, and you get that's the overall profit for the year minus the loss, and the actual final total profit is not bad. $21,000. That's trading at one lot. Of course, smaller lots is going to be $2,000 or $200. But in any case, it's very easy to set up and very easy to follow. Then we have 2020 starting off to a rough start. Some people don't trade end of year and the beginning of the year, and as you can tell, that's the reason why. But 2019 was actually a pretty nice takeoff, 450 pips. So you never know what's gonna happen. And then nothing, and then COVID came, and then there's a nice big juicy trade from here. Went all the way for 500 pips. It ended about somewhere here. Could have gone for another 500 or 600 pips, but who knew it's gonna dive this fast, all the way. it's important to actually stick to the strategy and make sure you follow the rules. This way you know what kind of outcome to expect. I was thinking about, you know, instead of doing the 1.5 or times 2 the stop loss, I'm like, why not just enter here and go all the way down and you know, exit when it crosses. You can do that, but a lot of times, you know, this is like one of those rare cases. A lot of times if you wait for the price to go all the way down and excuse me, and then cross back up, you're actually going to make less pips than if you you know, stick to the rules and go stop loss distance times 1.5 or times 2, whatever. And as you can see, you know, after this, there was, for a long time, there was no trades at all, no setups on this particular pair, and up until, you know, recently, end of May, June, started hitting, you know, 300, 300, 300, 300, and here's a good scenario. What happens when you know, you have your first trade, you know, this is a stop loss, goes boom, hits somewhere about here, hits 300 pips, and what do you do then? Well, nothing. You check what's going on. You know, this is still green, so you enter another trade here, and this is your stop loss now, and then you go for another times point, you know, times 1.5, which brings it to another 300, and then this target gets hit, you're still in the good, so you go for another one, and that was somewhere around here that my third 300 pip profit hit, and then it started getting consolidated, so I left it alone. But then, as you can see here, it started to kind of separate and go up, so that was my signal that you know, when it did this here, that was once again actually on this candle right here, because it has to also match with the green. So I saw this, it was green, I'm like, okay, that's my another entry signal, but it's not a trigger yet. So then you set up a buy limit. I usually there's this, you know, the book talks about some, you know, 60 pips away from this, whatever. I just find too much calculating, so what I usually do, just I put it right on the 8 moving average, adjust the stop loss to, you know, go to the last fractal down, and then, you know, take profit. Here is basically the distance from the entry to the stop loss times 1.5, and that's my new target. So when this retraces, I'm going to be in the profit in the trade, and then you know, hopefully it keeps going up and I'll make some more pips. But this is my you know, 2020 total profit so far, which is, you know, not too bad. And of course I have other pairs as well. I just it takes a little bit of time to map it out, and there you have it.